I don't feel like inflation is going to be a driver in the very near term, but I do think that looking a little farther ahead, the likelihood of inflation ramping up again in 2025, if there's cracks forming anywhere, rate cuts are a suggestion that there's cracks in the system somewhere.
Gwen Preston is back. She is the VP of Investor Relations at West Red Lake Gold Mines. We're going to be talking about updates to the project, what to expect for investors, and of course, we're going to be giving an update on the gold markets and the economy. Welcome back to the show, Gwen. Good to see you.
Good to see you as well, David. Thank you for having me.
We spoke a few months ago. Gold hit its all-time highs back then, around $2,400. It's reached a new all-time high since. It seems like every time I see you, gold just reaching a new high. And so today we're going to be talking about some of the drivers for, I guess, another new high. If that's in the works, I'll get your take on that. Today, on the 30th of August, the core PCE data from the U.S. came in. July data increased by 0.2%. And year to year, it was up 2.6%, in line with expectations. The gold price today, though, dropped 1%. I'm not sure if that's reacting to the news or something else. And the dollar did appreciate by about 35 basis points. So it's very interesting how gold is reacting to, I guess, a softer inflation number. What do you think are the major drivers then? Well, first of all, before we talk about the major drivers going forward, do you think that inflation is going to perhaps still be a dominant driver for gold going into the fall, into 2025, and what that would mean?
So I think I don't feel like inflation is going to be a driver in the very near term, like in the next few months. I feel like that trend is what it is. And it takes, while numbers can change quickly, I don't see them changing quickly in the next few months. But I do think that looking a little farther ahead, the likelihood of inflation ramping up again in 2025 is pretty good. And I think that sort of stems from the U.S. election and the fact that there isn't a candidate there who has sort of any austerity in their platform, and the debt situation in America, the sovereign debt situation just keeps getting dicier and dicier, right? And so, the deficit's at, the deficit came in well over expectations just recently. I mean, spending is out of control, and there aren't answers for that, right? And so I think gold's increases in the last couple months are related to that. There's lots of different drivers. They all work in conjunction, that we all understand. But I think the risk that significant U.S. spending and the realization that could lead us to inflation, whether it's stagflation or not, I think that's going to play out in 2025. So that works in gold's favor. But I don't think we're going to see inflation next month. I don't see a particular reason for that.
The 10-year yield also went up as did the 30-year yield, which may have been contributing to the decline in the gold price today on the 30th. I wonder, Gwen, if the market is pricing in today's PCE data as suggesting that the Fed may not be as aggressive with rate cutting into 2025 because the inflation numbers were not significantly lower, actually, if not really any lower than the previous months. And so it's still relatively sticky around 2.6% core PCE. What is your expectation ultimately for what the Fed could do and how that could affect the gold market?
Yeah, it's a good question. I mean, I think expectations are strong that we will get a first modest cut in the middle of September, 25 basis points. Jerome Powell has played his cards clearly. He and decidedly so. He likes to tell us what he's going to do and then do it. So it would take a dramatic alteration, like some scary data point for him to shift from that right now. Now, is he going to follow through and do a bunch of rate cuts this year? I mean, I don't see huge rationale for that. He's been a slow and steady as she goes on the rates front. He doesn't want to cut before he's really confident that he thinks that it's necessary. So, I mean, do we get a second rate cut in November, something like that? I mean, I don't think that rate cuts are going to be a dramatic in scale, but they are going to be dramatic in sentiment, right? Scale and sentiment aren't always aligned. And just the shift to a rate cutting environment, even though it probably is only 25 to 50 basis points for the rest of the year, I think that will matter because there is that, for gold investors at least, because there is that very clear connection in investors' minds between, falling rates and using gold to hedge that.
Okay, so then ultimately, overall, would you say that gold has reached a plateau, or do you expect price movements from here, either up or down, going into the fall and ultimately into quarter 4?
There's a few other levers that could well pull in gold's favor in the fall. I mean, September is seasonally the strongest month for gold. That has been a pretty reliable pattern for the last 40 years. So that's something that's just in the background. The Chinese central bank really stepped back on its gold buying through the summer for some internal reasons, but we've heard arguments that they're going to step back into the market more in the fall. So that would be significant. And just uncertainty around the US election. I mean, no matter which way it goes, the lead up to the election is a very uncertain period. And then the result of the election creates a whole bunch of more uncertainty. Certainly when Trump got in back in 2016, gold went crazy after that election, partly just because it was such a significant change from the previous administration. So there's a lot of uncertainty out there. Uncertainty absolutely drives gold, especially when it's so closely tied to, government spending. So I think there's a lot of things that could play in gold's favor. There's always, of course, the potential for cracks in the stock market. Is that going to play out? I'm not going to pretend that I have any resolution on that. But these things all exist. They're all sitting out there, and I don't see a huge number of forces pushing against gold. From where I stand right now, at least.
The belief that bad news is good news for gold, does that still hold this year?
Oh my gosh, right? It's also upside down and backwards, right? I mean, you were just saying it. So, PCE numbers did not show the inflation coming down.
Yeah.
Therefore, potentially rate hikes came off the table a bit.
Yeah.
So then gold came down. So yeah, it is. It's an upside down and backwards situation because there is this really strong connection between rate cuts and gold. Now, the weirder one for me is that rate cuts are also seen as good for the stock market. That's the one that sort of fundamentally doesn't make sense. It does, but it doesn't, right? In our new liquidity fueled trading environment, it does make sense. But on a fundamental basis, rate cuts are supposed to be because the economy needs support, not because it's time to invest in the stock market. So that inside out and backwards interface, I think, has weakened a little bit in the last few years, but it still exists. So from that standpoint, maybe a slow set of rate cuts is maybe a bit less volatile. Maybe we have less to we won't have to spend as much time wringing our hands wondering whether the response to negative news is going to be good or bad.
When we spoke a few months ago, we spoke about the impact of Chinese buying and Chinese demand on gold on the price. And, I'll let you rehash what you found through your research. But basically, it's a very interesting approach to looking at the price. You said, and I encourage people to watch that interview, links down below. But you said that the Chinese demand from last year, both from a retail and the central bank sides, have been largely responsible for the new all-time highs. Is that force still in play, Gwen?
So yeah, that argument was, like I say, just to rehash slightly, through the dramatic rate hike cycle that we went through, traditionally that we would have expected gold to decline during that rate hike cycle, but it did not. In fact, it rose. And so for a long time, a lot of gold analysts tried to find alternate explanations. Oh, it's because of uncertainty. It's because people don't think that the hikes are going to increase. It's because of this, that. And then it became clear sort of belatedly that no, it's China. And other central banks that are trying to diversify away from the US dollar. But China is, of course, such a larger player than the others that, it's easy to just name them. And when you go back and there was one or two very good analyses of Chinese central bank gold buying, and it represented a huge portion and an unrecognized force in the gold space. So yes, I think through the rate hike cycle, Chinese buying in particular from the central bank, and then increasingly from retail investors who are looking for places to put money now that the levers that worked so well during the period of dramatic growth in China don't work anymore. The stock market and real estate, interest rates, those things are gone. So they're pivoting back towards gold as a traditional place to put money with upside and safety. That was a really important force. The Chinese central bank actually stepped back from its gold purchasing through the summer, and it'll be really interesting. First of all, I think that's interesting because gold kept rising during the summer. We've had a great summer for gold. So is that pretty cool timing that there was more interest from Western investors because of this rising talk of rate cuts here? Did those things just line up nicely? I think that's what happened. what will happen in the fall if the People's Bank of China does step back in and just quietly start amping up its gold purchases again. That's the kind of scenario that could play out in the fall. We shall see, but I think it's definitely a possibility.
Okay, so a lot of important macro developments to follow in regards to the gold market. We've got the Fed pivot potentially coming, Chinese buying, like you just said, inflation, and where interest rates are headed. So we'll be watching for those forces in the fall. Let's turn now to the miners. I like to share my screen with you, Gwen, and also to the
Mhm.
audience. I have here the GDXJ, so VanEck
Yeah.
Junior Gold Miners ETF, which is not just juniors, it's also some mid-cap producers as well. But if
Mhm.
you overlay this with gold, same price scale. What you have here is gold and the GDXJ somewhat performing in line with each other over the course of the year. Year to date, gold is up 21.5%. The GDXJ is up about 20%. So similar, but investors want that leverage, Gwen. The investors want to make more than gold in an up market. 21% for the last 8 months is very good for gold, but I want to do even better with my miners because why take that risk if it doesn't? What is the catalyst for outperformance that we've all been waiting for, Gwen?
Oh, this is the question, isn't it, David? This is the question.
Well, at
I
least
mean,
it's not underperforming. It was
that is
underperforming.
exactly what I was about to say. At least
Yeah.
it is not underperformance, which is unfortunately what the GDX and the GDXJ have been giving us. I mean, gold is up, what is it, 85% in 5 years,
Yeah.
and the GDX is up. I'm trying to remember the number, but I think
I'll
it's
give you right
like
now. It's 10%.
35% or something over
In the
5 years. So
In the last 5 years, gold is up 60%. GDXJ is up about 10%. So you're right.
there you right. Yeah. So the at least the equities are tracking alongside gold now. I mean, that's not
Yeah.
a strong argument for to invest in equities, but you can look at that on the glass half full side if you
Yes.
want to, which is that it takes time for investors to pivot, right? Like they're not going to generally investors don't pivot into gold equities ahead of a gold move. They just don't. They pivot after the gold move. And yes, this is a particularly dragged out pivot into the equities, but I think there is some reason to believe that the fact that gold equities are now tracking the gold price is a positive. And it's a suggestion that if Western interest really does start to grow, it just wasn't there. We talked about this last time too. For years now, you haven't needed generalist investors haven't needed to look for, outside sources of gains. You could literally own the index in Nvidia, and those are basically the same thing. And that did just fine, right? And if that's the setup, then they're not going to go speculating or searching for security or trying to diversify. And so that I think is the fundamental reason why gold equities haven't done particularly well, even though the gold price has done pretty well. But if there's cracks forming anywhere, rate cuts are a suggestion that there's cracks in the system somewhere, then maybe that search for security for diversity starts to happen. Maybe that's the force. And then man, if you're producing gold into a $2,500 gold environment, you make a lot of money. And so I think that the gold miners quarterly results, the second quarter results that came out in August, those got some attention. Yes, we've stepped back a little bit in the last few days, but like those quarterly results did get nice attention because, oh my gosh, the profit margins were phenomenal. And so I think, if you get another quarter of that, that starts to attract attention from any kind of investor.
Well, I've heard the speculation that producers have just realized higher costs over the last year. Is that true?
I think that the cost inflation was a huge story in the mining space in the previous few years. It doesn't, from what I am seeing in my research, it's not a dramatic force right now. And that matters because the gold price move is pretty dramatic. And I don't think that cost inflation is that dramatic. So I don't think we're going to see the gold price, the profitability from a higher gold price just get eaten away from cost inflation, which is what we did see in that gold surge post-COVID when, of course, cost inflation was such a massive thing. I don't think we're in that situation right now. I think costs are more controlled. And so the upside from the gold price is present.
Well, let's just take a look at what miners are doing now to add shareholder value. Let's take West Red Lake Gold, for example. As an example, I know it's just one project. There's thousands of miners, but let's just take what you're doing as an example of what miners are doing now, putting the money into the ground to potentially add shareholder value? Maybe give us an update.
Absolutely. I mean, West Red Lake Gold was formed specifically to try to take advantage for shareholders of a new gold market. And the way to do that, from the viewpoint of Shane Williams, who's our president and CEO, and who founded the company alongside Frank Giustra, who's obviously had a lot of success investing in mining companies, the way to do that was to create a new platform where they could grow gold production aggressively, while by using really deep expertise in mining and good access to capital. And those two things, deep expertise in mining and good access to capital, those are actually quite rare in the mining space, because a space that's as cyclical as it is, expertise gets thin because people leave in the bad markets. And so there isn't a huge depth of expertise in how to actually build and operate mines. And there isn't a lot of access to capital. And talk to any junior company out there, and most of them are going to tell you that in no uncertain terms. So use access to capital and expertise to try to grow a company rapidly in the gold space. And our first kick at that can is the Madsen project, of course, in Western Ontario. And we're just incredibly busy. We are pushing this thing ahead as quickly as we possibly can. I mean, we are underground drilling to develop resource confidence. We're using that resource confidence to create a mine plan. We're putting that mine plan into a pre-feasibility study that is going to come out in about 2 months. That's going to outline how much it's going to cost to start this mine, how much it's going to cost to run this mine, how much gold we're going to produce, and when all of that's going to happen. And I think the market will find all of those answers quite appealing. We've been pushing this project ahead so quickly that we haven't been able to number those answers, right? You got to put out the official study before you can talk about how many ounces you're going to produce or how much it's going to cost. And you just have to do a lot of work before you can get that study done. We are finally at the point where we're going to get that study done. And we are actually pretty close to being ready to turn it all back on again. So the reason that we're doing so much work and pushing so hard to get this thing turned on next year is we want to produce gold into a $2,500 gold environment, or whatever the gold price is in 2025, because that's a really good opportunity to make money as long as you have an efficient mine. We want to put it into production into that gold environment. And just because this is the foundational asset. We want to grow into a bigger gold company. And this is our test case. We can do this. We're mine operators. We're going to turn this asset around. And then we want to repeat that feat on the next asset. And I think that there's a real opportunity to do that, because the lack of access to capital and the lack of mining expertise means that there's actually a bunch of assets out there where this kind of turnaround story is possible. And so we want to go out there and grow aggressively, but use smart money, and smart decisions to turn into a gold company that gives leverage, the leverage that we were just talking about being missing in the GDXJ, in the GDX relative to the gold price. We want to bring leverage back, and we want to do it within West Red Lake Gold Mine stock, because we grow aggressively with smart decisions in a rising gold market.
Gwen, I'm seeing reports that it's just the gold market right now. I'm talking about the mining sector is just a really hated asset class, if you want to call it an asset class from an investor standpoint. What is the industry need to do to turn this hate around? You talked about Nvidia and tech stocks attracting the capital. Overall, though, what does the industry need to do to turn this capital back or attract it back into this gold space?
It's a really good question. There's a bit of a chicken and an egg. Why do investors ever invest in gold mining equities? They do it for leverage to the gold price. If we're not producing leverage to the gold price, how do we attract the investors? But without the investors, how do we create the leverage? So it's a bit of a chicken and an egg, but I think the approach that we're taking at West Red Lake is that we just have to create such a compelling story that we can attract the generalist investors back to the space. And yes, there's absolutely a perception out there. I mean, we've seen it as the gold price moved from $2,400 to $2,500 an ounce over the last little while. We had connections that we know who are, fund managers, in various major capital centers in the world. They were getting inbound saying, we want exposure to gold, but we just don't, from generalist investors, but we just don't know where to put our money. We're a little gun shy because of what happened last time. And what happened last time is gold companies chased production for the sake of production. They did not focus on shareholder gains. And so we at West Red Lake just want to turn that around. Yes, we want to grow aggressively, but we want to grow aggressively not for the sake of growth, but because we think we can, with expertise, grow aggressively in ways that will generate shareholder returns. So it's about pivoting it and creating such a compelling story that you can feed an answer to those people who want gold exposure, but just are a little wary of, like you say, what's sort of a broken mining equity space.
Well, you said that you really want to push for Matson to go online next year. I'm just throwing this out there. Hypothetically, let's say the gold price drops to $2,000. I'm not saying, oh, well, we're below that. Are you still committed to that plan? Would the price of the gold downward affect or delay production?
At this point, I mean, we have to make our plans based on expectations for the gold price for sure. Right now, the forward curve for gold is very much in contango, right? The expectations are hot for gold over the next few years. Now, our expectations for costs at the Madsen mine mean that we could definitely still operate at $2,000 an ounce, which is a really comfortable thing to say, right? Because we're at $2,500 an ounce. If the gold price could lose $500 an ounce and we're still comfortable, then that means that sort of just reinforces the confidence that we have in this high grade mine and the efficient mine plan that we're building around the high grade resource to work. Now, it's not going to work as well. It's not going to produce as much money as it will at $2,500 an ounce, but for sure. Now, if gold tanks back down to some atrocious number, if it falls by half, that of course is going to impact. And I think there's a lot of mines in the world that would reassess whether they're going to operate at $1,500 an ounce. But the other thing is this Madsen mine, the last time it did operate, which was only a few years ago, this again sort of reminds us how quickly the gold price has moved so far. When this mine was operating only a few years ago, it was operating in a $1,400 gold price environment, right? And so the opportunity for us to do well for shareholders in today's gold environment is it's sort of right there on the table.
What are your plans to raise money in order to finance this production without diluting shareholder value?
That's exactly it. So we want to access the last piece of capital that we need to put this mine back into production without diluting shareholders. We've tapped the equity markets a lot over our first year as a company owning the Madsen mine. And that's because we needed to do so many capital projects at the mine site to get it ready for efficient operations upon a restart decision. But now we understand that the markets are probably not excited about another equity raise. But the great thing is that when you're this close to production, there are debt opportunities on the table. So we are in fairly advanced conversations with on quite a few fronts to access the last piece of capital, and it will be non-dilutive. And we expect to close on that in the coming months, sort of around about the same time as the pre-feasibility study. These things are all coming to a head at the same time. It's going to be a really exciting fall for us because of that, because we hope to outline the mine, show that we have access to the capital, say that we're restarting, and when it's going to happen. We want to do that all sort of in the same time frame in the coming months.
Gwen, this is this is sort of an out there question. I talked to a lot of Bitcoin miners, and some of what they do is they bind the Bitcoin and they keep it on their balance sheet. Not all of them, some of them do.
Okay.
And a lot of the value is derived from the actual value of the thing that they mine, which is Bitcoin.
Right.
Once you go into production for Matson, is that a strategy that a gold miner typically pursues, which is to, instead of releasing the gold into the markets, just keep that and hold that?
Interesting question. Yeah, I mean, it hasn't been a strategy that I've seen in gold miners historically. If anything, gold miners have been bit by doing the opposite, which is hedging, and then not making as much on their gold, because for various debt reasons they were required to hedge some of their production, and they ended up losing out on that structure. If the gold price goes from 2,500 to 2,800, holding on to gold ounces to get that percentage gain is probably not as advantageous to our shareholders as the profits that we would be able to generate by selling that gold and then demonstrating the profitability of our asset, especially because this mine, there's a lot of investors out there who are aware of the mine's history, who are really in the show me camp. They want to know that this mine is going to work with all of the new approaches and efficiencies that we've added to it and resource confidence that we've added to it. So it's really important for us to demonstrate that it works. So for those two reasons, that's not something that's on the table right now, but we're actually open to all kinds of opportunity. I mean, we're talking about how can we make gold purchasing more accessible to small retail investors? Is there some way that we can do a monthly pay to own process? Can we help people own gold? Can we hold it for them? We think about those kinds of things all the time, because it's maybe not just holding gold for West Red Lake, but trying to help make that an option for more people. We have those conversations all the time. We want to do mining differently, and that's one thing that we talk about.
What percentage of, let's say, the Matson deposit is copper versus gold? I wonder if it's a pure gold project or if
It's
it's a
pure gold. We got all
okay.
gold all the time.
Okay. All right. I asked that because the copper price has been going down. So I'm wondering if when we look at valuations for West Red Lake Gold, for example, we need to be cognizant of also the copper price. But in this case, I guess it's not applicable, right?
It's not applicable. Our calculations when you're trying to do a model for our mine, one simple aspect of it is that there's only one metal in consideration. We don't even have any silver. It's just all gold.
Is that rare to have a pure gold project?
It's not rare, but it is certainly, there's a certain set of deposits that are all gold, and certainly some of the really good orogenic gold camps in Quebec and Ontario, a lot of them are predominantly gold. There may be a hint of silver here and there, but they're really predominantly gold. Of course, there's a lot of other deposits out there in the world that are gold, silver together.
Any recent drill updates you can give us?
Yeah, for sure. In sort of two categories, I would say. So we're very busy on the underground drilling, which is the infill drill program. That's where we're working to really increase the confidence and knowledge of our resource. In our predecessors' days, they sort of mined the entire resource block model. But really, and that does define where the gold is, but the gold is not continuous within that block model. So the infill drilling purpose is to define the lenses within the block model where the gold actually sits. And if you can define those lenses, then you don't have to send the unmineralized part of the resource block model through your mill. And if you do send it through your mill, then you're diluting the mineralization, and that's how you end up with problems with what grade you're sending up for processing. So infill drilling, really important, and we're doing like 6-meter centers. This thing is getting hammered with drill holes. So that process is ongoing. And if anything, I think our drill results are slowly but steadily improving, just slightly. But that speaks to our geologic team and what an impressive job, in my estimation, they have done creating a resource model with that they have a lot of confidence in. They really understand the lithology. They really understand the structural controls. They really understand each portion of this deposit, and the positive drill results are starting to speak to that. And then that's one reason that they moved up to the most complicated part of the deposit, which is called McVeigh. Structurally, it's really folded. It's a complicated area. Those folds mean that it holds some really phenomenal grades, but it's hardest to understand. But we're at a level of understanding within the overall system that they were ready to go up there, and they pulled some phenomenal results. 2 weeks ago, we reported 107 grams per ton gold over a meter from that part. So the infill drill program is doing exactly what it needs to do, and it's feeding into our mine engineers, and they're building the mine plan.
Okay.
The other component of drilling, just briefly, is that we're doing a surface program that's trying to make a new discovery, and we're very excited about that possibility as well. It's exploration drilling. We'll see what happens, but we're very excited about that possibility as well.
Okay, so final question. Before we can expect Matson to go into production next year, what is one or perhaps two events that investors of West Red Lake Gold need to be aware of or watching from now until the end of the year?
Absolutely. So I think the key ones will be securing that last piece of capital. I think there's questions out there for people who follow the story. People think, how much more money is it going to take to put this thing into production? So we are going to answer that question with the pre-feasibility study, which will also tell how much gold we're going to produce each year and what the cost of that gold is going to be. And then our plan is also to secure access to that capital around about the same time as that pre-feasibility study comes out, so that we answer the questions and we show that we have access to the money. And that should clear up any confusion and address some of the hesitations around when it's going to happen and how much it's going to cost. The answers are going to be, here's the cost, we have it covered, and here's the timeline to production. That's our goal, is to announce all of those things this fall. And those should be pretty important news events for the stock when should they come to be.
Well, I appreciate your thoughts. Gwen, where can we learn more about West Red Lake Gold and follow news events?
The good old website, westredlakegold.com. You can find us there on all of our social handles there. And anytime you have any questions, just reach out. I'm easily findable, G Preston at WRLGold.com. I love talking to investors or interested investors. So anyone reach out anytime.
Do you still write about mining, by the way? Does the resource maven still have a, resource for us? Is that something we can follow?
She does not. There isn't enough
Okay,
time to do all of that. I
I
still think
understand.
about these things a lot, but they don't exit my head the way they used to.
Well, next time you come on the show, we'll get more out of your head. So that's another
Sounds
analyst.
good.
All right. Thank you for watching, and don't forget to subscribe.